Financial statements by Adriana Ivanek. Financial statements outline the financial performance of a business through the statement of comprehensive income, the statement of financial position, the statement of changes in equity, and the statement of cash flows. The statement of comprehensive income determines if the company is a success or a failure by reporting the revenues and expenses over a period of time. Revenues are an increase in resources resulting from the sale of goods and services, where a revenue can only be recorded when it is earned, as stated by the revenue recognition principle. Expenses are a decrease in resources resulting from the sale of goods and services, where the matching principle states that expenses are to be recorded in the period the resources are used to gain revenue. So, we need to minus expenses from the revenues to determine the net profit or loss. And here we have Gary's pool cleaners, where we can see his revenues exceed expenses, which means Gary has made a profit for his business. The statement of financial position shows the business's assets, liabilities, and equity at a specific point in time, where the asset is a resource of economic value that will provide future benefit for the business, where the cost principle requires the asset to be recorded at the cost paid to acquire them. A liability is a company's obligation from past operations that are settled through future economic transactions, and equity is the difference between a company's assets and liabilities, including contributed capital and retained earnings. So, assets must balance with liabilities and equity, and here we can see that Gary's pool cleaning assets are equal to the sum of liability and equity, which is a positive business result. The statement of changes in equity shows the change in retained earnings over a specific period of time, where retained earnings are the profits kept within the business. It is calculated by adding or subtracting the net profit or loss and then minusing dividends. Here, Gary's pool cleaning business had no retained earnings in January, but made a $615 profit and a dividend of $150, which left the business $465 in retained earnings. Changes in equity link the statement of comprehensive income and financial position, as retained earnings cannot be calculated at the end of the period without knowing the profit earned. Finally, the statement of cash flows reports a business's cash inflows and outflows by reporting the business's source and uses of cash over a specific period of time. This is done through operating, investing, and financing activities. By adding cash inflows and subtracting cash outflows from each of the activities, the net increase or decrease of cash is calculated. Here, Gary's pool cleaning's ending cash balance is $335, showing us that the business's cash inflows cover the cash outflows. Lastly, don't forget GAAP, the generally accepted accounting principles that all statements must adhere to appropriately assess a business's financial performance. Thank you for watching.